We are live from Bloomberg's world headquarters in Midtown Manhattan. I'm Matt Miller.
And I'm Sonali Basak, stepping in for Kaylee Lyons today. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, high stakes, Bitcoin bounces back today, even as the SEC piles on the pressure. We'll weigh the regulatory risks with Michael Shaulov of Fireblocks.
And the world's biggest crypto exchange is feeling the squeeze. We're going to take stock of Binance as it joins the roster of companies facing fresh scrutiny.
Plus, as the regulatory ripples track through the industry, we'll put the spotlight on mining with the CEOs of Hut 8 and U.S. Bitcoin. That's all ahead. But first, here's a snapshot of what's going on in markets today. As I said, we do have a bounce back in Bitcoin, even as equity indexes fall post those CPI reports. Bitcoin still up 2% at back over 22,000. It had fallen below that for the last couple of sessions on concern about the Wells notice that went out to Paxos, as well as the settlement with Kraken. Speaking of Paxos, you can see that Binance coin is right now up 1.7%, also bouncing back right now, 295 and change. Ether, by the way, up more than 4% right now at 1,546. So Ether really bouncing back after concern about staking is raised, and we're going to talk a lot about that throughout this program. Finally, Coinbase had 7 days of drops and is now snapping that streak back up more than 1% at $57.09 a share. Gary Gensler did warn crypto firms to take note of the SEC's settlement with Kraken over staking. Gensler spoke last week right here on Bloomberg Television.
These storefronts, these crypto exchanges, crypto lending platforms, crypto staking as a service, they need to come into compliance, and they are generally non-compliant right now. The investing public is not only at risk by the speculative nature of crypto, but they're at risk of ending up in line in a bankruptcy court because a lot of these platforms are doing things they're not disclosing.
Now, there's a ton of disagreement around staking. Crypto holders stake some of their assets in order to secure a network like Ethereum. The SEC has sued crypto exchange Kraken for its staking service, accusing it of offering illegal, unregistered securities with advertised investment returns as high as 21%. Now, the SEC has alleged that Kraken didn't give investors the right disclosures. Kraken didn't admit or deny wrongdoing, though it had agreed to settle for $30 million and also stopped its staking service. But even within the SEC, there's disagreement. Commissioner Hester Peirce said that there are dissents. She dissents to the agency's actions, and that the SEC registration process makes it difficult for crypto offerings to make crypto more available to customers. Staking, however, is a big deal for crypto networks like Ethereum, and it's also a big deal for rival exchanges. For example, Coinbase CEO has been getting increasing revenue at Coinbase from its subscriptions and services unit, which includes staking. Brian Armstrong argues now that the firm's staking services are not securities and that his team would defend the issue in court if needed. His top lawyer has even said the SEC has made misinformed assertions about the business of staking. The staking issue is just one of many being raised by the SEC. Days after the Kraken case, stablecoin issuer Paxos had responded to a fresh issue. Paxos says it received a Wells notice from the SEC and that the agency is considering bringing on an action alleging that one of its most popular stablecoins is a security. Now, Paxos is already stopping the issuance of the BUSD stablecoin as a top New York regulator ordered it to, because much of the unresolved issues with its relationship to the exchange counterparty Binance. Now, Paxos offers other large stablecoins, and while it reached a resolution with New York's regulator, there is still tension with the SEC. Paxos said it would vigorously litigate if necessary, and it disagrees with the SEC in that the BUSD stablecoin is a security under U.S. laws. So whether it's staking, the listing of popular stablecoins, or the long-standing fight to turn certain investment vehicles into ETFs, the pending lawsuits are building. The industry is paying millions of dollars to lawyers who are gearing up for a huge fight against the SEC's actions. And hanging in the balance are billions worth of investments at stake.
Billions at stake and potentially taking the U.S. out of the global digital asset conversation. At least that's the view of Michael Shaulov, co-founder and CEO of crypto custody firm Fireblocks. Michael joins us now here on set in New York. Michael, thanks so much for coming on the program. Great to have you here. what's your take on Gary Gensler's ruling, or his intent with the settlement with Kraken?
Yeah, I mean, I think that first and foremost, we're seeing all those regulatory actions, right, being taken against some of the more prominent players in the U.S. market. And in some regards, it basically drives the investors and it drives the public from operating in the U.S. market and drives them outside, right? Basically, offshore entities. But as we've seen already with FTX, those entities are less secure, or they are less basically susceptible to U.S. regulators enforcing consumer protections.
Doesn't it make sense, though, that staking as a service, especially offered by an exchange, that seems like a security?
I think it's difficult to basically assess what exactly it is, right? And if we will take a step back, I think that in many regards, we sort of operating from a rule book that is suited for horses, and now we have cars, right? And we basically need to change the rule book because, staking in some regards is sort of like installing solar panels and contribute electricity to the grid and then getting something in return. And I'm not sure if it's exactly a security or not, right? I think there should be certain protections, right? There should be certain disclosures. Now, the main issue is that the U.S. regulators are not progressing fast enough and providing the guidance to the industry of how exactly we should deliver those services, unlike regulators abroad that are actually moving in a very rapid pace in terms of providing guidance and regulatory clarity on what each one of those activities actually means and how we should protect consumers.
How big of a deal is this for Ethereum in particular, given the move to the proof-of-stake model? Does it significantly impact the ability for it to scale when so many exchanges are facing this threat of the SEC?
It's a good question, but I think that overall, as we've seen in crypto for the last couple of years, right, it's a very global system, right? So if something is actually banned in China or something is actually banned in the United States, the activity very quickly moves to different jurisdictions, right? When there is clarity, it's allowed. So maybe there is a temporary setback for the stability, which I'm not sure is actually, we are seeing it right now, but I'm pretty confident that if this stability actually exists, it will basically be rebalanced offshore in some jurisdictions like Europe, APAC, where this activity is clear and it's allowed.
I guess one other question I have is how much does it matter that Gary Gensler is coming down so hard? You mentioned you're not sure if it's staking is a security or not, but Gary Gensler is pretty clear when he says that it is. We're going to watch these legal battles start to play out, but that will take a long time. Do you think that the companies that are operating the space have enough dry powder to make it through that time onto the other end of this fight where they may or may not win?
Look, I think that overall, the losers in this fight is, first of all, the American public and the American economy, right? Because all those companies and all those investors eventually has the opportunity to go and operate in jurisdictions like Singapore, like Australia, like Europe, like APAC, like the UAE, and they're all basically pushing ahead with providing a pretty warm regulatory infrastructure, right, for those companies to operate, right? Effectively, what it does, it sets the U.S. infrastructure for this transformational wave of using digital assets, of using the crypto rails. It's setting it back, right? Because companies will operate abroad.
Well, but what's the alternative, especially after the collapse of FTX and Voyager and Genesis and you name it? I mean, investors are getting burned left and right, and not just for a few $100,000 or a few million, or it's like billions of dollars that are just being eviscerated. Yeah. So we can't just set up a friendly regulatory structure and continue to see these kind of losses.
Yeah, I'm not sure that I'm advocating for not doing anything or for a friendly, over-friendly regulatory structure. Right? I think that what needs to happen is basically not to basically structure everything as a security, right? There are two frameworks, right? Some frameworks, that, as we've seen in Singapore and Australia, right, where there is one government agency that basically takes ownership. They learn the topic, they engage with the industry, they decide what are the appropriate consumer protection measures, and they basically move forward with them. There is another model, for example, in the UAE, which they actually set up a dedicated agency that regulates crypto, right? And I think both of those models work, right? What is happening right now is sort of unclear, and it seems to be much more political, right? And an aftermath that instead of constructive measures.
Clearly, it is, and it's great to get your take. Michael, thanks so much for joining us. Michael Shaulov there of Fireblocks telling us how he thinks we should work it out in this country.
Coming up next, miners are combining. Hut 8 and U.S. Bitcoin are merging. We're going to speak to the CEO of the new company, Jaime Leverton, alongside U.S. Bitcoin co-founder Mike Ho.
And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg. This is Bloomberg Crypto. I'm Matt Miller with Sonali Basak. Now, Bitcoin miners have made a comeback this year, but challenges remain as the SEC cracks down on digital assets. Bloomberg's David Pan joins us now to talk more about this industry, or this part of the industry, which is so fascinating. He covers it in depth for us here at Bloomberg News. David, they've been struggling to stay afloat, these miners, with mounting debt since the crypto crash at the end of 21, beginning of 22. How are they coping with it now?
Right, so we started seeing a lot of troubled mining companies selling assets such as data centers or mining machines at a discount.
As well as their crypto hoards, right?
Yeah, exactly. Also, we are seeing a higher level of management turnover. So they're swapping their existing executives with professionals that are well versed in restructuring or M&A.
So why now? What is the market rationale for these two companies, Hut 8 and U.S. Bitcoin, to merge? What does it do in a market that, as you say, after such struggle, is trying to come out of this alive?
Yeah, so Bitcoin mining actually is a very industrialized sector. So they want to achieve economy of scale to reduce costs. For example, they will want to have enough cash deposits to secure power purchase agreements, and they will want to, reduce costs by laying off some of the people within the management. Also, at the same time, they can reduce the risks by diversifying the locations of the mining sites, to prevent some of these natural disasters from causing damages to the machines.
Do we have, by the way, do we see an advantage here to miners now that proof of stake is under attack? I mean, proof of work is, I guess, the only other way left.
Right. I think it's really interesting because I've heard some Ethereum miners, and they were saying, I told you so, because, if Ethereum were still staying with proof of work, and then we wouldn't have a lot of the problems we're having right now.
Understood. David, thanks so much for your coverage, and thanks so much for joining us. David Pan covers mining for us at Bloomberg News. Now, joining us to talk more about this, Hut 8 mining CEO Jaime Leverton and U.S. Bitcoin co-founder and CEO Mike Ho. You heard from David Pan just now, a lot of miners saying, I told you so. I can understand that, considering such a big to-do was made of proof of stake. Jaime, what do you think of this latest development in that approach?
And I think it is what we expected to see. It's unfortunate. We at Hut 8 were a miner of Ethereum, and certainly would have liked to see it continue as a proof of work network.
Mike, what do you think of the SEC's deal with Kraken and the idea that staking as a service they see as a security?
Echo that sentiment. The proof of stake allows concentration of larger funds just buying up simply the coin and having an influence over the network, whereas proof of work is truly democratized. You have a network of miners globally contributing to the network and securing how the platform performs.
I'd love to double down on that with you, Jaime, because you had just kind of mentioned this idea where you had mined Ethereum as well. What's the path forward? It was interesting to see Ethereum prices really rebound, even with that looming threat of greater regulatory oversight or crackdown, if you will. So what's the road ahead for assets outside of Bitcoin?
I think it's really difficult to say, and certainly clarity is something that the industry desperately needs in order for it to chart a more solid path forward.
And, Michael, on that note as well, too, what does it do now that both of your companies are put together in an industry that was so sorely bruised after last year? You are seeing this kind of price increase this year. What does that price increase of Bitcoin itself mean for the merger of both of your companies?
We have a ton of synergies. We've always held HUT to the highest regard, and with Jaime at the helm, being able to be so disciplined throughout the bull markets, whereas the rest of the public peers were bought into the hysteria and bought very expensive hardware. The companies that come out as true winners are built in the bear markets. It's maintaining that balance sheet and knowing how to be agile and navigate the downturns.
What's your approach, Mike, to the energy usage debate? I know Jaime has long been a champion of greener mining at HUT 8. How do you approach this problem?
Absolutely. It's shown within the sites that we operate at. In New York, we're right at Niagara Falls. We're over 90% hydro. In Texas, we have sites that are behind the meter, directly on the site of the energy generation, at the solar farms, at the wind farms. We partner with the energy companies, the renewable energy companies.
So, Jaime, in terms of your business, you've long benefited from the fact that you're not in the United States of America. And we just heard from Michael Shaulov saying he's worried that the kind of regulation we're going to get post-FTX is going to push businesses out. How do you view that in light of this combination?
I think geographic diversity is really important. We've long been exclusively in Canada, really looking for the right entry point into the U.S., and we believe we found the perfect partner in U.S. Bitcoin to do that.
Jaime, do you think that after this merger, there are more opportunities for consolidation? A lot of the issues of last year was the unwillingness of capital markets to really open up to the crypto sector, a lot of nervousness around the mining sector, but you did see very interesting deals pop up. You saw interesting rescue financings. What do the capital markets and merger environments look like for you now as a bigger company?
Yeah, I think we were expecting to see consolidation in the space. It was a little bit late to come, but we have seen some really interesting deals in mining over the last few months. And I think we're going to continue to see more M&A activity throughout the balance of 2023.
But what about for you? I mean, is there anything that you could do to either raise more money or buy more assets as you've seen so many other companies struggle?
I think our focus right now is entirely on getting this deal closed and bringing the companies together. But certainly, I've been on a growth trajectory, and I don't see that as something that will change in New HUT post closing of the deal.
All right, Jaime and Mike, great to get your takes. Thanks so much for joining us. Jaime Leverton of HUT 8 Mining and Mike Ho of US Bitcoin as the two combined. Be sure, by the way, to check out our Bloomberg Crypto podcast, which dives deeper than the daily market buzz to explore the stories and people shaping the ever-evolving digital landscape. Look for that every weekday wherever you get your podcasts. This is Bloomberg.
Welcome back to Bloomberg Crypto. I'm Shonali Bassick with Matt Miller. Now, some stories that caught our attention this week. Crypto is getting pushed back to the fringe of finance. The most powerful U.S. financial regulators are rapidly closing the doors between the digital asset industry and the country's banking system. And it means that new ventures may be smothered before they ever get off the ground. And banks and crypto companies are likely to scrap existing ones and upend their business models.
Hedge funds, private equity firms, and pension funds could soon face a tougher time working with many crypto firms. In a draft proposal from the SEC, it would be harder for crypto firms to be qualified custodians. That's the designation that allows companies to hold client assets for money managers. A vote for that effort is set for tomorrow.
Meanwhile, stablecoin issuer Circle issued a complaint last year about rival crypto firm Binance to New York's Department of Financial Services. They claimed that Binance didn't fully back some stablecoin proxies. Circle shares are regulated with Binance-branded stablecoin firm Paxos. On Monday, the New York regulator said it directed Paxos to end its relationship with Binance. The Binance story, Matt, is really interesting because now you have the CEO of Binance also talking about how algo stablecoins may reemerge after the pushback, and of course we had a lot of issues there. I do also want to look into, actually really point out another thing that has just happened here in the 13F filings. We found out that George Soros separately is betting against a crypto lender here, Silvergate Capital Corp. We don't know the size of the profit he would gain because we don't know what price he's really betting against in these put options. But interestingly here, you do have billionaire George Soros' family office betting against Silvergate with put options on 100,000 shares of the crypto firm.
Crypto lending is not a popular business right now. That's definitely something that the regulators are after. It's so interesting to me to see the New York regulator of financial services coming out against firms now that it had so happily issued BIT licenses to just a couple of years ago when it was in vogue. So the tide has definitely turned. That's palpable. You could cut it with a knife, as Tom Keene would say. And so it does seem like George Soros making this move is just part of a momentum trade that's bound to be successful for now.
Yeah, no matter how it ends, there's a lot of pressure on the industry. You have to see, again, what that price is what I want to know, what price he's really betting against, how far he thinks it actually goes. But to your point here, the overhang from the regulators is palpable and not going away anytime soon.
The outcome I'm most excited to hear about is what happens with the Gemini Genesis fight,
Yes.
right? Because this is such a fascinating business that Barry Silbert is in charge of, and he's a billionaire, so he could backstop, you would expect, his crypto lender, but he's not about to do it, and as a result, the Winklevi are out some respect as well.
Listen, you choke off lending, what happens? And now you're attacking staking. You have to wonder what the next shoe to drop. So on that end, I'm actually more interested in the Coinbase staking issue here, because Brian Armstrong, we've seen him on Twitter. He's spending the week in Washington, or at least part of the week, and fighting hard. But the question is, do they have enough to make it through this fight with the SEC? How hard is Gary Gensler really going to go? This is a U.S. exchange. This is a listed exchange. Is as close to regulated as anything can get. So, or it is regulated in many ways.
And it's hard to fight the SEC on the issue of what is and what isn't a security. So we're going to have to all keep reading through Matt Levine's columns and trying to figure out the Howey rule and does this meet it or not. It's been a really fascinating time to do this program. Thank you so much for joining me, Sonali Basak. Coming up next week, Archblock CIO Bill Wolfe and Kristen Smith, Executive Director of the Blockchain Association. This is Bloomberg.